Good morning, everyone, and welcome to this morning's London Forex webinar. As always, we've been messing around with our headsets and audio, and I hope we're coming through to you loud and clear. Before we start, as you know, just a quick look at the disclaimer. I know most of you have, I know all of you have seen it before, but it does bear repeating, and we have to start with a disclaimer before every webinar. Anyway, and as you know, trading can be extremely risky. It can be a very risky business. So please, please don't ever think of using money that you cannot afford to lose. Okay, those of you who have been here for the first time, I'll be running this webinar together with my husband David. He's actually sitting behind me at the moment because we've rejigged our office and trading space. But I've got eyes in the back of my head, so I always know what he's doing anyway. So there we are. Let's just take that down. He's laughing. Don't laugh, as my mother used to, late mother used to say. Right, this week, what's happening this week? What has been happening this week? My goodness. I think actually what we can say so far about this week is that it really has been a fantastic expression, an example of how David and I actually approach the Forex market, how we explain the Forex market, and also what is contained in the Forex program. And I can see from the list of attendees, some of you are already students of that program. I can also see some of you are, have bought our quantum trading tools, and I can also see some of you have, have neither. So I hope we can use this session to explain to you why we believe our approach to the markets, Forex, but it's equally applicable to whatever you trade, whether it's Forex, whether it's an index, a stock, it really doesn't matter. And it consists of three elements, although given what's happening on the political front, maybe there should be a fourth element. However, the three elements are, we have a technical analysis. In other words, we read the charts. Well, what is our approach to looking at the charts? We use a method called volume price analysis. We look at the price action and we look at the volume. And the indicators, that's a good number of the indicators we have developed are there to support this methodology. There are elements to the methodology. Then obviously we have the fundamental landscape, the economic releases, the data, what is coming up, which comes along monotonously on a regular basis, which is great in a way because we can anticipate what is coming up next. And today, actually, if we have a quick look at the calendar, we can see this is the calendar for investing.com, and it's actually chock-a-block for, right across the board. Most traders like to use the Forex Factory one. Here we have Thursday. We've had some important overnight news for New Zealand and Aussie, so obviously that's going to affect those two currencies. We've had a bond auction for Japan, hasn't been given a very high impact rating on Forex Factory. And then you can, we suggest having a look at Forex Factory, it gives you the highlights, but sometimes it does miss items of news which the market then picks up, and you think, well, that wasn't on my Forex Factory calendar, which is why we suggest you look at the investing.com as well. And I suppose the highlight of today is there's the OPEC meeting over wherever it is. I think it's in Vienna. They have it's a meeting they have on a regular basis. That's clearly going to be oil, and you think, well, hold on, that's oil. I'm not interested in oil. I'm interested in the Forex market. Well, you know what? The Canadian dollar is a petrocurrency. It's a commodity. Because why? Because Canada is an oil producer. We don't look at the NOK. We don't look at the Norwegian krona. That too is a petrocurrency. So, and the pair is there. There's the euro NOK, which actually trades quite nicely. There's the dollar NOK. So you immediately see that, Forex trading or all trading is not one dimensional. That's just two dimensions, but there's actually a third dimension. And that is that the four capital markets are all connected. There is an element of correlation between different instruments in that market, but it's not so much correlation. It's basically things will happen in one market which can actually signal what is going to happen in another. And as I said, this week was just an absolutely fantastic example of this. And the best way I can describe this very, very quickly before we go to the live charts, because there's been already some fantastic moves on the pound yen, something that I've written already on my Facebook page, and I'll pull that up later. because it had a fantastic move yesterday for a couple of reasons. One of them being this intermarket relationship, because of the yen was sold, there was better sentiment in the market, and the pound was going up because the markets have taken the view that with a week to go to the election, there is more likely to be some kind of majority for the Conservative Party. Anything can happen in a week, but that's what the market thinks at the moment. And that's what I said before, we have 3 dimension, but maybe the politics is the 4th. Right, this is the pound yen. And this is what I have also written about on my blog and on my Forex page. And you look at this chart, and this is the daily chart. Now this is earlier on it. This is last week. And you can see here the pair was actually moving away from what we call the volume point of control. Again, going back to saying using volume and price action to help us not only analyze what is going on in the chart, but also anticipate what is going to happen next. And what we can see here, we can see these candles rising, but we actually see a falling volume. That is an anomaly, and that is telling us that, you know, there's not it's not, you know, things aren't right with this chart. Now, the importance of the pound of the dollar yen is that it is also a proxy for risk. It's got the yen in the pair anyway, and the yen is either bought when the market is really not very happy. You know, risk appetite is falling, and it is sold very heavily when the market decides that it is happy to take on more risk, and so equities and indices rise. But this was last week. This is not now. This is last week. So you look at this chart and think, that looks very interesting. It also hit a resistance. Then we have these two. They have this candle here. We can see a little candle. Volume is falling anyway. Then this candle, this is really interesting, this candle. This is the daily, and you see a very narrow little body. It's like a little shooting star, a wick to the upper side and a reasonable amount of volume underneath then. And what is that telling you? That is telling you that there's a lot of effort going into this price action with this volume, but it ain't going very far. What happens? It then rolls over. What happened on Monday was Monday and Tuesday, the markets took an almighty dive. There was just, you know, fear suddenly rushed back into the market. There was a huge sell-off on that Monday and Tuesday. Now, I'll just go to my blog very quickly because this is the quickest way. This is just, I can't believe this happened this week, which is so fantastic. So basically, this was the post that we wrote, the volume signals the reversal, the potential. And this was actually based on the NinjaTrader. On the NinjaTrade platform, and it's just an explanation of why it was anomalous. And as I said, then we had this rollover on Monday and Tuesday. And in fact, on Monday, I also wrote there was a very nervy start to the trading week. PMI data was quite good. The fundamentals should have been supportive of the market, but there's all this tariff talk, gossip going around, and is it going to happen? Trump, you know, he's the 4th dimension, by the way, or even the 5th. Now I say the 5th dimension. The 4th dimension is politics. Trump is his own dimension, which he would love anyway. So there we are. And this is what I kind of said on Monday. I said, oh, it doesn't. But you know, one look at the dollar yen would have said to you, now, what does that mean from afar? You said, well, I don't trade the dollar yen. What does that mean for me? What it means for you is that those currencies, maybe an Aussie, maybe a New Zealand that you do trade in a pair, they are going to, particularly the Aussie, because it's got China in the narrative, that is going to have, it's going to be an issue with it. It's more likely to be selling off. And when you combine that, there was also there was some Aussie news at the beginning of the month, the first week of the month. There's some very heavy duty data, some central banks reporting. We had the BOC, everything. All these strands come together. So what the analysis that you do on your chart, VPA, not only will help you anticipate what is going to happen, you know, it will also you know, it looks ahead. It doesn't, I'm not going to use the word predict, it's anticipatory, because anything can happen. It anticipates something can happen, but you know, something can come up and upturn the apple cart. So that's what we said. Now, when everyone thought that the world was now, you know, the big short had finally arrived, then when this post went up on to my blog, and these are the 2 candles. This was Monday, this was Tuesday, and we had volatility. This was actually the YM, which is the E-mini for the Dow Jones, but the chart pattern was exactly the same on the ES, which is the S&P, and the NQ, which is the which is the Nasdaq. And again, anomalous volume. What is it telling you? There was a mother and father of all volume coming in. There was a huge wick to the bottom of the candle, and lo and behold, what happened yesterday? Did it go up, David? Yes, it did actually go up. It most certainly did. Everything.
And there was also a volatility trigger on that day, which is unusual.
Yes, which we had this volatility. Now, when we have volatility come into the market, and with the indicator that we have, the volatility is triggered, as we can see here on the pound yen. Then the price action will behave in a very particular way. The first reaction is that it will that once the volatility, which is based on average true range for this particular indicator, is triggered, the immediate reaction on the second candle after that, we can see here on the pound yen, this is the volatility trigger on this candle, huge move on the 15-minute chart. That is triggered. The second candle here, there has been a follow through, but before you get a follow through, the price action will then go back into the spread of the candle. It's like an elastic band. It kind of pings back as it were. Now, two things can happen. It will either then congest within the spread of this candle. This hasn't, or the wait for another trigger to decide whether it's going to carry on higher or come lower. On this occasion, because there's so much momentum behind it and there's more volume that's been piled in, it has actually pushed up. But look what's happened now. We've got a wick to the bottom, the top of this candle, and then we've had a much clearer example of what happens, and that is the price action has gone back into the spread of this candle. Now the pound yen. Here you have again, this perfect example of technical analysis, the fundamental, some fundamental news, but this particularly much more to do with sentiment in terms of the broader market sentiment. So and politics. So you've got the pound rising because, as I said before, this view that possibly there is going to be some majority. There's not going to be a hung parliament. We'll have to wait and see. And obviously, because I can see the yen being sold off, well, that's great. It also means the market is in a good mood. It's happy to take on more risk. What's also interesting, looking at the other thing, it goes without saying, this is all on multiple time frames, is the very interesting element of this chart, this is the daily chart, is if we look back to the degree of congestion, and again, I've written about this on my Facebook page, this is a perfect example of Wyckoff's second law, which we cover in great. We cover all Wyckoff's laws in the Forex program, and in fact, in the volume price analysis, we pay tribute to Wyckoff because a volume price analysis is something David and I have put together. We've taken, but it's nothing new. Wyckoff was there. He laid the groundwork for explaining why the price does what it does on the chart using price action and volume. We've changed it. We've used candles. We don't use bars. We've introduced the element of time to it, which I don't believe I know he doesn't cover in the detail that we do. We do candles. We do candle patterns. As I said, and we use support and resistance from a price-based support and resistance, but also a volume and time-based support and resistance. Now, the key issue about this chart is this is an expression of Wyckoff's second law, which is cause and effect. In other words, the longer something is in this congestion period, the cause, then when there is the breakout, the greater that effect. And that's important to understand and appreciate, because, can you still hear me, David? Sorry. Okay. Appreciate, because often when you have, let's go back to the hourly chart, which is really, when you have had a move of a significant magnitude, as a trader, most of the time we look back and say, oh, I've missed that. What on earth am I going to do? Where am I going to get in? Because what is normally taught is, well, you've missed the move, you've got to wait for the fade, you've got to, it's called not chasing price. Unfortunately, the way certain markets and instruments have been over the last maybe 8 years, to wit the indices, If you were going to wait for a major melt up and a major reversal, you'd be still sitting on your hands. So you know, if something is going up, as Livermore said, nothing is ever too high not to buy, and nothing is ever too low not to sell. But you've got to understand the price action. You've got to understand where, you know, you could possibly re-enter, and this is where looking at VPA, looking at the support and resistance, and, you know, looking at the charts in multiple time frames. You have to forget the fact that, you know, the bulk of the move may have gone, but at least you can take you know, something from that. And one of the ways you can do that is by using non-time-based charts. So for example, here I have this based on a Renko. Now this is the move higher that we've seen. You can see here there's been congestion periods, there have been pullbacks, and I expect traders would have tried to take, you know, not chasing price. Oh well, I'm going to, you know, take this little bit here in the fade. Then it goes up again. Then it comes back. There's always this teasing that it is going to reverse significantly. And what does it do? It keeps marching higher. Now this is set on the ATR value for the bricks, and in fact it's I just leave the indicator to do that. So each of those bricks is set at 3.5, but you can set it on your own value, so you can set it on a very fast value. But getting back to where you could you know, with a kind of a re-entry, well, this is where you use support and resistance. You look at what the time chart is doing. You always use this in conjunction with the time chart. So we can see here, where are there potential re-entry points? Well, you've missed all that, but look at this. There's this little chunk here, which is actually coming to a little bit of a pause point as we come up to London. How that translates into the actual time chart, the 3 minutes has actually moved up. Is we look at an indicator such as, this is the volume point of control. This is where, you know, looking at it back on the Renko, we've seen this attempt to rise, then it's come back again. We know that's a strong level of support, 142.63, because it is support, not only price-based support, but it's support based on volume and time. So it's a nice cushion, as it were. So we wait there. It did actually go into red, the trend monitor. These are the indicators that we've developed to help us make this analysis with the price action and the volume that we're reading here. So we've had this blue, you know, it's not been a steady higher, it's been more in congestion, and then we do wait for the point at which it breaks out. It has broken out with volatility, I do accept that, but what the Renko does, it smooths out this volatility, it absorbs it, because all it's looking at is the price action. Now, how that translates on the 3 minute, this is dynamic, and when we came this morning, this was still down here because this was the point of the congestion earlier. It has now moved up to here, so if you like, your entry would have been here. But look at this trend. This is a trend, a very, very volatile trend. And this is something we also cover in the program. Everyone says markets move in three ways, up, down, and sideways. Well, they do, but the up and down could be smooth or it could be volatile. This is very much volatile. So if you wanted to play this trend and you just use a time chart, you would have been, your emotions would have been all over the place. There's volatility triggers coming right, left, and center. 1, 2, 3, 4 candles. With these purple dots on them. You've got wicks to the top, you've got wicks to the bottom. You think, oh my goodness, what on earth has happened, is happening. But if you use a non-time based chart, you know, you can still time your entry and you can move higher. Now what's interesting, it's now gone into a little bit of sideways because we're coming up to London. On the 3 minute chart, as I said, we've got the volume point of control there, but on a longer term basis, this pound yen is I wouldn't say it's determined to be bullish, but it is wanting to be bullish. And finally, which is what the chart that the indicator that breaks all the currencies out, the currency strength indicator. If we look at what the lines are doing, when I said earlier, nothing is too high potentially to buy or, you know, too low to sell. The pound, these are the, you know, the attempts to reverse it's kept pushing up, and now it's pushing up again. Doesn't mean to say there will not be an opportunity to trade to the downside, But if you're not aware of what the price action is telling you at the moment and what it is anticipating, then you're forever going to be trying to take trades and forever being stopped out of the market. Now, what the matrix is saying here, let's just look at I've had the CAD up because that was another one which was a great example today about this week about price action, fundamental, and everything else. And as I said, that's on my Facebook page. Just where's the pound? Now, in fact, the pound yen has not been it's been the most volatile mover, as we can see, but actually the pound New Zealand's not been a bad potential candidate for a trade. And this is the New Zealand here. I use the 1 hour CSI because I can pick up very quickly what's been happening in the Asia session and where they are at the moment. I know London is coming up. Is it going to carry on in the same direction, or maybe we are going to get a reversal? Now, from a practical perspective, if you had taken this little bit of a trade with London coming up and you're a short-term trader, you think, you know what, London can be so so difficult to anticipate what is going to happen. Take your profit. It is December as well. You've got some profit, take it. You can always go back in. The cost of trading is so low these days. Don't chance it, even more so because it is December. As we move closer to the holidays, liquidity is going to reduce and it's going to actually get more volatile. So, bit of a long-winded, as I said, explanation, but there's been a lot going on this week. With the price action, with the fundamentals, as I said, with the related markets and with the politics and with Donald. And you think, as a new trader, you think, oh my goodness, how on earth am I ever going to pull all those things together? Well, you know what? You will, because one of our neighbours is a pilot. He's recently been promoted to long haul, so he's now a captain. So he flies those big airplanes. When he started on a very small two-seater that I've had a couple of flying lessons. So has David. It's literally a joystick and a couple of instruments, and you look out the window and you're looking at the horizon. You look at the wings and the flaps, and you start from there, and eventually, you all know what the cockpit of a sophisticated, I don't know, 747s don't fly anymore. What are they, Airbuses or something, whatever they're called. Everyone has to start somewhere, and I can assure you, the information and data that's coming at you, you will learn. Your brain will learn to you recognize the significance, what is important and what to ignore. As I said, and the yen, we haven't talked about bonds. Bonds too are important. Which currencies, what is market sentiment? What is the VIX doing? That means there's more likely to be buying and selling of the yen. You will soon put all these things together. So I said, just bear that in mind. We all start in a two-seater little aeroplane, but we can soon go off and fly an Airbus. And finally, with the pound yen, as I said here, this is the hour. This is the 4 hour, no volatility, still wants to go higher. And as I said, the key is really this daily chart, which, as I said, I'm not saying there's not going to be a reaction to the moves in the faster time frames, but boy, oh boy, there is so much energy stored in this consolidation phase of price action. And look at the platform of strong support, 139. Here we are, the volume point. It's the 140 level, which is absolutely key. And if what happens with the politics does come to a pass, then the pound really will rocket. Right, that's what I've got to say. I'm sorry, as I said, I just wanted to get it all out this morning. I'm going to pass over to David because he's been looking at, what have you been looking at, the pound yen as well, or something else?
I have actually, yeah.
Oh right, he's going to look, because the other thing is, on the NinjaTrader platform we have some slightly different indicators, and one of them is as a trader, if you don't use a non-time based chart and you don't have the volatility trigger, how can you pick up if the price is actually, if there's momentum, if there's some speed in the move that is happening, or if there is no speed, even more important. And I'll pass over to David and he'll explain how we've overcome this issue with a very particular indicator. There we are. How's that, dear? I hope you've been taking notes.
I have.
Thank you, darling, and a very warm welcome. And sorry, Anna caught me midstream there. I'm just going to go back to, I'll start with the time-based charts because there's a lot going on. There we go. I've got the pound yen up here. This is on 15-second, 2-minute, 5-minute, down onto 15, 60, and daily. And just to reiterate what Anna's been saying, the last 3 days, I have to say, have been fantastic for trading. I can't stress that too strongly. What I would also say is, and you can read this in the post, is Donald is a joy. He's a dimension on his own. He delivers, but importantly, what he delivers is volatility. And what volatility gives us is opportunity. But moreover, with that volatility, the corollary is that because it's delivered through a statement, this is not fundamental data, this is just a statement, someone saying something about something. Inevitably, what we see is a reaction against it. In other words, what we call the souffle, what Anna and I call the souffle effect. In other words, it rises quickly and falls just as fast, or vice versa, inverse souffle, if you will. But that's what you're looking for. So whenever he speaks or whenever he twitters something out, he tweets, and the market reacts strongly, you can almost be certain that that event, that reaction is going to be short-lived, and therefore what you're looking for is to get in, make money on the reaction, and then you're looking to reverse and make money in the opposite direction. And really, I can't stress it too strongly. It's a fantastic opportunity. He is a joy to the markets. He's a delight to us. Whether you love him or hate him, from a personal perspective, that's up to you. From a market perspective, he's just the best thing that ever happened. I can't tell you. I cannot stress that too strongly. And if you understand, picking up on Anna's point, if you understand all the related aspects of market behavior, I'm not going to say this is simple, but it is straightforward. Because if you're looking at the bond markets and you're looking for yields falling or rising, or you're looking for bond prices rising or falling, you're also looking at gold. What is gold doing? Is gold going up or down? What are the risk currencies doing? Are they being bought or are they being sold? And you put all that together. You look at indices. What is the risk appetite in terms of equity markets? Are they falling on Globex or are they rising on Globex? Remember, these markets trade 24/7. There's the cash markets, yes, they open and close on 7 or 8 hour windows, but the electronic market is there 24/7. And if you have a platform like NinjaTrader and you're running Globex 24/7 with these indices, or if you go to investing.com, because they deliver this data for you, so you can check it out there. There's always a market that's open, and that will give you a view on sentiment. Because when you distill this market down, the financial market making money in this business, it's down to one single thing, and that is to understand sentiment. Because that's all this business is about. It is the flow of money, either chasing risk or chasing safe haven. It's either looking for higher reward, higher return, or it's moving into safe haven assets for protection. That's it. There is no other metric that governs the flow. It's all about flow. It's the strength of flow, and that applies whether you're trading Forex, whether you're trading indices, whether you're an investor, whether you're an intraday trader, whether you're trading bonds, whatever it is, it's all exactly the same. I'm sorry to sound like the record stuck in a groove. It's what we have put together in the Complete Forex Trading Program, because that's all this is about. It's understanding the related aspects of market behavior and how to then benefit accordingly. And if you can do that, then you will make money. It does also imply that you need multiple screens. It goes without saying. There's a lot of data to consume. You have to have it at your fingertips, particularly if you're an intraday trader. That's why you see people with 6, 8, 10, even 12 screens. I'm not suggesting you start with that. As Anna said, you start with a Cessna basic model where you climb in, there's a dipstick in the the engine and all the rest of it. It's very basic, but gradually you develop, you bring more monitors in, you've got more market data to analyze, and so on and so forth, and you find your comfort zone, what it is you find comfortable for trading. I've got to say, I've got the pound yen up here. I'm just going to flick around, and one of the things I've also pulled up, if you're looking at the pound in terms of either intraday or longer term, you've got to be aware of what the betting is saying. This is the spread betting. The spread betting really hasn't moved very much. It's if you look down here, we've got this is basically on a majority. In other words, what is the spread of seats that each of the parties is going to end up with on come the 13th? And this has been pretty much around. This is the spread 338, 344. So you can sell at 338 or buy at 344. It hasn't moved a great deal. It's been slightly below that and slightly above that, but pretty much that's where it's settled, certainly over the last 6 or 7 days at any rate. There's been a little bit of a clawback in terms of conservative momentum. It's dropped a little bit. That seems to have flattened off now, and it's back on a sort of minor upwards trajectory. Labour's been on a little bit of an upwards trajectory as well, partly because a lot of the other parties are falling away a little bit, so they've been picking up. So if you like, the two have been going up together. The Labour seats, I think the lowest it's got to was something like 199, just sub 200. That's come back to 215, 221. So that's where we are in terms of the spread bettors. In terms of the odds bettors, this is a site I use a lot. It's called oddschecker.com. Gives you a multiple array. These are all the UK spread bettors, or pretty much all of them anyway, the major ones. And what it gives you is a snapshot of the odds across those particular betting companies. You can see here, this is the market for the most seats, betting odds. Sorry, conservatives down here, you can see it varies 1 to 25, 1 to 20 odd. So that's really the sort of spread, the odds you're looking at. And in terms of Labour, it's been pretty much around 11, 12, 13 to 1. A couple here, one there at 16 to 1. But these are pretty long odds, as you would expect. And then obviously you've got Lib Dems, Brexit, and UKIP and the other parties down the bottom here. But this is really the one to watch. And again, it hasn't really varied very much. A lot of these companies do their own. They do their own analysis. They're doing their own sampling. So they can't be that far out. And the other one, of course, to look at also is Betfair, where you're betting against peer-to-peer betting over here. So that's pretty current to look at as well. That obviously varies all the time. But that just gives you a snapshot. So that's really giving a flavour of looking at the British pound as to the likely outcome and the reaction in the market. Now, in terms of, if we just pop down onto the daily chart, we did a post on the 6B, which is the currency future, which is cable, pound dollar, purely from the perspective of congestion and time, going back to the whole issue of time. This is the volume point of control up here, this yellow line, yellow dash line, heaviest concentration of volume. This is the pound yen, but the chart for cable is pretty much the same. It's been trading around this very tight range for a long time. And the issue then is, it's like the analogy I've used, and I'm sure you've heard it many times, is the clockwork toy. You wind that spring up, you're storing energy in that spring, you wind it ever tighter until you get to the absolute maximum you can. There's no more you can wind into the spring. The energy is full. You put the car down and release it, and off it goes. It goes at a hell of a lick and then obviously gradually slows down. And that's exactly the same principle here. This is about time and the length of time that the market is in congestion. And as it starts to move away from the volume point of control, there are opportunities. First of all, obviously, to confirm that the breakaway is actually genuine. And indeed, you can see here yesterday we had a nice widespread upcan, good solid volume under there, no real wicks to mention. So this looks like the development of the genuine breakaway. Now, what we wrote about in terms of the 6B, in terms of principles, how do you trade this? Well, you can just trade it as a straightforward, I'm going to trade the trend, I'm going to buy the pound, I'm intraday trading, or I'm buying it longer term, absolutely fine. The point we made on the 6B prior to any strong move away from the volume point of control there was you can actually use options. Options are a very elegant instrument. They're incredibly flexible, and you can construct strategies that either are very low risk or very high risk, so they suit every type of trader. I mean, the simplest is you buy an option and your risk is the maximum to the buying the premium, or you buy a put, and that's it. you can only lose what you've put on the table. So you always know it's a limited risk, open-ended profit if you're buying puts and calls. But the tactical approach for breakaway trading, or certainly one of them, is a long straddle, basically where you're buying a put and a call, same expiry, same strike. It's a directionless position, and what it is premised on is the fact that you are looking for volatility. Now, obviously, the option prices will be climbing because everybody knows when the election is due. So this is not an event that has no calendar date to it, if you will. If you were looking at this perhaps as, let's say, this was a stock, let's say not near a release of data, but perhaps just a regular stock trading in a narrow range, and you don't know when it's going to break away, other than at some point it will break away. What you're looking for is volatility, because volatility is the key. Because if the market breaks and you get volatile price action, then that simple strategy will repay. It will pay out, because it's premised on the fact that the market is going to move strongly away. It's a directionless trade, so if you're not quite sure which direction it's going to go, on this occasion, I mean, we're all expecting the market. Sorry, just flick that up onto 5. Just keep an eye on what's going on as we get through into London. Just want to see what's happening. Got a nice widespread up candle there. Got low volume on the volume point of control, so we're breaking up into a low volume region. Trend monitor is nice and blue. So it's a strategy that you can adopt, and it's not necessarily restricted, obviously, to a daily time frame. You can apply this to any particular time frame you choose. But certainly, when you're looking at it for breakaway trading and you're not certain which direction it's going to take, it's certainly one to consider. So I just wanted to highlight that because it's just a nice example of an opportunity to make money using a different tactical approach and a different instrument, which is extremely flexible, as I say. Let's just hop over onto see where we are in terms of the indices themselves. Just pull them up. What we've seen so far, this is on 5 minute. I've got the yen index here. I've got the dollar index over on the right. This is the euro down at the bottom left, and we've got the pound here over on the bottom right. And as you can see, this is part of the reason that we're seeing, primarily the reason we're seeing a nice move in the pound yen. We've got the pound here rising nicely strongly. And we've got the yen here up at the top left falling strongly, and all that reveals is, and you've got the dollar also falling a little bit over here as well, so that's starting to develop a downwards direction. And if you just hop over onto the currency strength indicator, that's the currency matrix. I'll pop over onto that in a minute. This is what we're seeing right now, this very strong buying of the British pound, this yellow line. We're well up into overbought. Does that mean it's going to roll over? Not necessarily, but it's certainly overbought on 5 minute. This is on the 5 minute time frame. This is the Japanese yen, which is falling equally strongly. Spoiled for choice, really. Early doors as we got up around about here, 6 o'clock, 6:15. This was falling nicely. Then it picked up here. We had a cross. Really nice, solid move. You also had it on the Swiss franc as well, and also on the Aussie. So you've got Aussie rising very strongly, Swiss franc falling very strongly. Really straightforward, nice moves developing. Up onto 10. Same picture there. It's very sharp rally in the pound, very weak reversal in the Swiss franc, nice rising in the Aussie, nice rising in the CAD. So we've got the commodity currencies, they're all rising strongly, and what that's telling you, certainly from an intraday perspective at any rate, this is we're in risk-on territory, because commodity currencies per se, as a general rule, are considered to be risk currencies. Therefore, when they're rising together, you can generally be assured that the market is happy to take on more risk. That's what it's all about. That's what I said earlier on. It's all about flow. Yen is falling. That's really just confirming that picture. Up onto 15. There we go. Exactly the same picture, just a little bit. Obviously, it's what's being reflected here is a slower reflection of what is going on 5. And what you're constantly looking for as a forex trader is you're looking for that universal sentiment across your window. If you're an intraday trader and you're looking at the 5, 10, 15, then what you want to see is that flow from the 5 out into the 10 and up into the 15. So the buying of the pound, you want to see that continuing, and it is. You want to see that if you're in the Swiss franc, you want to see that selling continue, and it is. It's still got a little way to go. The Japanese yen has still got a little way to go. Doesn't mean it's necessarily going to get down to these overbought and oversold regions, but it's certainly pushing down towards that. It doesn't have to get there. It doesn't have to go deeply into here. It doesn't have to go deeply into overbought. But these are just guidelines, if you will, to help to guide you as to when a currency is perhaps reaching an overbought or an oversold state. We head on to the currency matrix. This is on 5, in fact, probably up onto the 15. There we go. That's on 15. I've isolated out the British pound, just toggle it on and off here. You can see them all ranked there. Just isolate it back off again. This is what we're seeing. We are seeing, in other words, a picture of universal buying right now of the British pound. Funnily enough, on 15, we've got the pound Swiss. The reason the pound Swiss is up here at the top, it's actually a little bit stronger than the pound yen, not a great deal, but marginally so. It's because I highlighted there, you've got the Swiss franc, which is falling very strongly. What is selling of the Swiss franc telling you? Well, Swiss franc's the risk currency. So if the Swiss franc is being sold and the Japanese yen is being sold, and you're seeing commodity currencies rising, and I can guarantee you, if you go over onto bonds, which you can find on investing.com, you will find the yields there. They are reflecting that as well. And I haven't looked at gold. We can take a quick flick at gold, but I can certainly guarantee you in terms of indices, they were rising nicely as well. So that's just isolating out the pound. And what that's telling you is not only is it telling you which ones are the strongest in terms of market sentiment pairs, but it's also telling you that sentiment across the complex, certainly on 15 at any rate, is pretty much universal for the time being. In other words, everybody is buying the pound, some more strongly than others, but that is basically the picture. If we go on to the currency array here, this is giving us an indication of trend strength for those particular pairs. It's also telling us, so it's telling us the pound Swiss up here, it's got a really strong trend on 5 minutes for the time being. It's also telling us about the market sentiment in the same way that the currency matrix does, in terms of whether we are seeing universal buying or selling. We've got the euro pound at the bottom here, so it's pretty much aligned. And if the pound Aussie hops up here, then we've got a perfect array. We've got a full house, if you like to use a card analogy. And then down on the right-hand side here, we have a ranking ladder, which is giving us indication of when a currency pair is reaching an overbought or oversold state, as opposed to a currency on the currency strength indicator. And what this is doing is giving us in brackets, when it's a darker blue in brackets or a darker red in brackets, then it's simply saying, well, we're approaching that state. And when these ultimately change through to bright colors with no brackets, then it's giving us a heads up that that particular currency pair has potentially reached an overbought or oversold state. As you can see here, the euro pound down at the bottom is potentially at an oversold state. It doesn't mean it's got there yet. It doesn't mean it's necessarily going to reverse, but it just gives you a heads up to go and look at the chart. If you've not looked at that particular pair, it may be giving you a signal that, yes, perhaps this is looking now at a reversal opportunity. And obviously you do that in conjunction with the indicators. You do that in conjunction with support and resistance. You do it in conjunction with obviously volume. Is volume giving you a signal that the buyers are stepping in? This is about to reverse, etc., etc. You can see this one here starting to get into that's now reached potentially an overbought situation cable on 15 minute. And then finally onto the currency heat map. Again, I've isolated out the pound because it's interesting. Some little while ago, you would have seen the inverse of this. You would have seen all of these at the bottom and this one up at the top. And gradually over the last few days and weeks, we've seen all these migrate up to the top. It's pretty much universal sentiment across the piece. Now, obviously, putting the politics to one side, if this were a non-political situation, you might well be looking at that as thinking, okay, this is we've now got a potential opportunity for overbought, oversold on a much slower perspective, because the pairs down here do not move at the same speed as they do on the array and the matrix, purely because, for one simple reason, these are weighted. These are weighted according to the time along the top here. And your common sense would suggest that if you've got a change in sentiment on a 1 minute time frame, it's not going to carry as much weight as on a 5 or a 10 or a 15 and so on and so forth. So each one of these pairs carries a weighting according to the bearish or bullish sentiment of the particular time horizon. So a slower time horizon will carry more weight than a faster time horizon. And the corollary to that is that these pairs here will not move so quickly. So this is up at the top. I wouldn't expect that to move in the next 5 minutes, but certainly during the day, if there's a change in sentiment, perhaps let's say there's a poll comes out and it's quite dramatic, and there's a shift in the numbers, then you might well expect to start to see these fall off the top, maybe 1 or 2 spots, because that sentiment will ripple out into the slower time frames, and that in turn will be reflected onto the ranking ladder at the left-hand side. So it just gives you a snapshot of all the pairs. Just put the whole lot back on. There we are. It's a very, very quick, powerful way of just getting a sense of seeing that, again, it's the ripple effect of sentiment. When you start to see this sort of taking shape, the little bit of bearish sentiment coming in for that particular pair, a little bit here, when you start to see these numbers start to rise, when you start to see the cells start to change color from bullish to bearish, it just gives you a perspective on what is going on across the time frames without necessarily having all the charts up at your fingertips. Let's just go back onto the time-based charts, and we'll head over onto the tick charts to see what's going on here. Okay, a little bit of a pause point, a little bit of weakness coming in here. You can see we've got decent volume under here, wick to the upper side. Seeing that this is on 15 seconds, this is very quick, may not suit your cup of tea, but it's one I use a lot across multiple markets just to give perspective. And because it also gives me a view on what is going on in a very fast time frame, coming up at me into an inverted commas slower time frame. 2-bar reversal here. It's bearish engulfing, if you will, but if you overlay one on top of the other and put this on a 4-minute chart, you'd have an upthrust there on decent volume. And again, you know, coming through into London, what we expect to see. It's core. You will see pauses, you will see congestion, you will see reversals. You have to be patient and wait. You cannot take trades close to the London Open because you will get cut to ribbons. It's a question of waiting for the volume to develop, and then trading accordingly once the market's settled. Just go on to the tick charts for a moment, which Anna mentioned earlier on. And tick is the same as a Renko chart. In other words, it's time independent. I've got this set again. This is on the pound yen. These are the tick settings. I've got this on I've got this on a 15 second. So this is a pretty fast chart. This is on a 34 tick setting. Sorry, let's just update that 55 tick. Put that on there. There we go. So these numbers are coming off here. This is a tick speedometer, which actually delivers the optimal tick settings for that particular instrument. This is a spot currency, but it applies equally to indices, futures, whatever your cup of tea. Down onto the 2 minute, I've got 610 tick here, and this is on 4 minute. I'll just change it up to 5 minute. There we go. Those two are running at the same speed at the moment, so they're both running at 610. That'll be the same chart as above. There we go. And when you're trading these charts, they give you one thing that a time-based chart doesn't give you, which is momentum. And you'll see that on a Renko as well. Because a Renko is time independent in the same way as a tick chart is, what the tick chart delivers is the raw momentum of the market, because there is no time aspect here. On a 55 tick chart, like this one, every time 55 ticks have gone through the market, then the candle will build and close accordingly and move on to the next one. So whether that's taken a nanosecond or a microsecond or a millisecond, whatever it is, it will move on to the next one. It's independent of time, and that's why a lot of traders like to use tick charts, because they deliver momentum. You'll see the speed and momentum of the market, which you don't see on a time chart. What you'll see on a time chart is volatility. When you get volatility, what you'll see on a time-based chart is a candle that whipsaws up and down and then closes when the time stamp has finished. What you'll see on a tick chart, you see that delivered in terms of bricks or candles. On Renko it'll be bricks, and on tick charts it'll be candles. Nice little move developing to the upside. We're still running a little bit lightweight in terms of what the tick speedometer does here. It oscillates all these various colors between green, orange, and red. When it's running in red, it's sluggish. When we're in orange, it's a good uptick. And when we're in green, we've got volume coming into the market. We can see here we had a nice ramp up there, starting to be reflected there. We're running in red down on 5 minutes, so you want to see that pick up. You can see the level of tick activity down here is pretty low. You want to see that translate back into orange. Ideally, as a tick trader, what you want to see is the transitional between orange and green. Predominantly, you don't want to see red, because when you're running in red, it means the market is sluggish, it's lacking participation. You really want to be running on tick charts when you're looking at high participation, or at least average participation for that particular instrument, for that particular market. So we're ticking up here nicely. Just push that one up. Same indicators apply. We've got the trend monitor down here. You can see it's transitioned through to blue. This is a classical transition from red into darker red, out into darker blue, out the other side, and it's also reflected with the trend line, which is rising nicely away from the fulcrum of the market here. We've hit the volume point of control here, which is not a great sign for continuation, because we're expecting congestion. But bear in mind, this is a pretty quick chart, so congestion may only last a minute, couple of minutes, 2, 3, 4 minutes. Everything is relative. We've gone through a nice platform here, which was resistance, which has now become a platform of support to the downside. To the upside, what have we got? Very lightweight in terms of price resistance here, which is literally being tested as I'm talking at 14. So that's been tested once in the past and has held. Is it going to hold this time? Doesn't look like it. It's very weak, so that's not going to cause much of a barrier to an upwards move. And as we get up into 17, so we've got another 3 or 4 pips here. As we get up here, we've got very lightweight volume on the volume point of control. So that is not going to present a barrier from a volume perspective. So looking at the chart purely from the perspective of support and resistance, we've got nothing in terms of price-based support, which is this one, which is the accumulation distribution indicator. And it's exactly the same, or it works in a similar way to the support and resistance indicator on MT4, MT5. In other words, it's price-based. It's looking at price all the time and how many times the level's been hit. But you can use volume in exactly the same way, because volume is congestion. If you've got heavy areas of volume, then that is going to act as resistance in an upwards move or support in the downwards move. So if the volume is falling away, as it is here, any move to the upside should not have much in the way of a barrier from a volume perspective. So we expect that to move through there pretty quickly. And obviously you'll then be looking at the other time frame charts to get a perspective on what's going on there. This is up on 610. Not sure if this is speeding up or slow. No, it's still at 610. This one has now speeded up. We've gone up to 987 here. So we'll just change that one up. There we go. And the reason you've got two numbers here is not to confuse. It's simply that this actual number, you can use the actual, but it does change very, very frequently. As you can see here, we're running at fib, the actual and the fib number here. The fib number has nothing to do with Fibonacci, other than it was a mechanism to give us the opportunity to develop a number that didn't work quite so, or didn't change quite so rapidly. So this is changing all the time. So generally it's a choice between, do you use this one, which is going to change a lot, it's going to change fast, or do you use this one where you have to change your charts less frequently? Okay, so this is 55, so we're okay here. This is now stepped down to 377, so I'll just change that over there. There we go. And on up we go. There we go. Right, let's go back onto the time-based chart. Oh, let's go and see what indices are doing. Beg pardon. Let's just have a quick look at that. Just get a view on sentiment. This is on Globex. As I said, this is 24/7 market. YM, that's the Dow. We've got the Nasdaq and we've got the ES over here on the right-hand side. This is what we've seen so far in the morning. This is on the daily. That was the chart that I think it was on the YM. We did. I can't remember now. Yeah, pretty sure it was. That was the daily chart with the buying coming in. That's what we said on Tuesday. The market rose nicely yesterday, and we're trying to see it rally again this morning. But as you can see, it's coming off a little bit, and that will be reflected in terms of, let's go to the CSI. Oops, go down on there. That'll be reflected in terms of CSI. We're starting to see some buying of the yen coming in now. We're starting to see the Aussie sell off a little bit, so risk appetite is draining away. Don't think there's been anything particularly said or twittered or whatever, but that's what we're starting to see. You can see here New Zealand dollars kicking down. Aussie dollars already started to move lower. Yen is starting to buy. Let's have a quick look at the indices on the currency indices. Let's see if that's reflected there. Yep, starting to see that yen buying coming in here. There we go. We've got some euro buying in here. We haven't really looked at the euro today. The pound here is gone into a bit of a congestion phase. and the dollar is in congestion over here. But that's really what we're seeing now. We're starting to see that yen buying coming into the market. And it really just goes back to what I said. This is all about sentiment and flow. And if you've got the indicators and you understand relational analysis and fundamentals and how to read them, and it's just putting it all together, which is what the Forex trading program is all about. It's as simple as that. Let's have a quick look on commodities. Just see what gold's up to and oil. Got OPEC all day, so maybe oil isn't going to go very far. That's on the daily. We went through this very strong resistance area here, just below $58 a barrel yesterday. So maybe that's going to present a platform. If it does, and we get through here, then we've got a strong, it's another candidate, if you will, possibly for a breakaway strategy from the volume point of control on a slower time horizon. A directionist strategy maybe, or you may decide to put some direction into that. You can see gold ticking up here. This is the GC contract. We're on February now. So we've got gold ticking up. So we've got a little bit of gold buying coming into the market. It's again, you know, gold is safe haven. It's not particularly being driven by inflation, which is one of its big drivers because there's a lack of inflation globally. So predominantly what's driving gold is either risk asset, risk haven, a risk safe haven, either in or out, or alternatively dollar strength or weakness. That relationship it comes and goes, it breaks down from time to time. We've written about it previously, not fairly recently about that, but certainly that is another aspect to consider. But from a pure perspective of risk and risk flows, gold is obviously one to watch as well. It's all about watching the markets, and I haven't got the bond yields up here, but you can check them out on investing, and you'll see that reflected in bond yields. If bond prices are rising, then bond yields will be falling, and vice versa. Okay, how are we doing for time? Okay, let's just go on back onto the multiple times again. There we go, and just see where we are. Quite a bit of congestion building, and when congestion builds, then what you're looking for is you're looking to set your levels. You're looking for, well, what level am I happy to get back into? This particular positions, what Anna said about getting back into a trend. Alternatively, you may want to trade reversals, which personally I do a lot. Probably trade that more than anything else. So in terms of the currency strength indicator, you know, what I'm looking at all the time, my eyes always up the top here. I'm always looking for opportunities here. The pound isn't going anywhere at the moment, but rest assured at some point it will come off there. It has to, because no currency stays there forever. So from a trading perspective, I would have certainly been looking at the Aussie as an opportunity. Down here at the yen, I'd also be looking at the Swiss franc to get in there early, because if you're going to get into a reversal position, the beauty of it is you get in early and you make a lot more money purely because you have got in early. You're not jumping on a trend. The trend in the Aussie yen will already, certainly from a 5-minute perspective, will already be well developed or developing nicely. But if you're going to get into it early, then the quid pro quo, and for example, you could say, well, I'm going to jump on, let's say, the pound Swiss. Fine. In terms of putting that position on the table, your stop loss would have to be quite wide to allow for any buffering that is going to go on in terms of the pound. So your stop loss position is much wider, because the pound, you don't know when the pound is going to sell off from this overbought state. It will, but you don't know when. So to allow for the when factor, you have to set a wide stop loss, because this could oscillate around up here for some time before it actually sells off. Equally, the Swiss franc, same thing. So the quid pro quo is, if you're a reversal trader, you get in early, you put more risk on the table, but the payoff is greater. If you're a trend trader, you get in later, you make less money, but then the risk is lower as well. That's all this business is about. It's about risk and reward. How much risk do you want to put on the table for how much reward? And if you're prepared to put more risk, then you should be rewarded with a bigger profit. It's as simple as that. Let's just have a look and see what's going on 10. There we are, similar sort of situation. It's just starting. You can see the yen here is just starting to flatten off. The Swiss franc is just starting to flatten off, just starting to kick up. The pound is still pretty strong up there. And bear in mind, obviously, it's being driven not by fundamentals, not by relationals. It's being driven by politics. So that could turn on a sixpence. It's just being aware of that for the next week or so. Once the election is over, then the pound, assuming there is a workable majority for the Conservative Party, then the pound will settle. It will almost certainly strengthen, and that will strengthen across the complex. And over time, that is probably going to be the longer term direction. But more importantly, the volatility associated with the political aspects, which we've seen for the last 2-3 years, will drain away, and it will become, in inverted commas, a more stable currency to trade and more aligned to the fundamentals. In other words, will rotate back into being more important, because once Brexit is out of the way, or at least set aside, is not a headline anymore, then what will become important is how the British economy then fares in this new environment. And that is when the fundamentals will start to take effect. I'm getting the signal from Anna to wrap up. So that's the political betting. I would urge you to keep a track on that. If you're not aware of all the sites, this is Anna's site, annacooling.com. You can check out all the posts there that we put up, and all the books obviously there. And obviously you can find details of all the indicators, and also TradeStation International, which is coming soon, both TradeStation Securities and TradeStation Global. TradeStation Global is the relationship with Interactive Brokers, where you can drive TradeStation through the IB account, which is a fantastic relationship. TradeStation Securities is the US version of TradeStation. This is where you'll find all the details on the education program, quantumtradingeducation.com. It says the complete Forex trading program. It's exactly what it is. It covers everything you need to know. It's all there. To be honest, the cost of the educational element is, which we don't sell separately, but it's part and parcel. I mean, it's $497. Where else can you find that sort of value? I don't know. You tell me. But it covers everything there. You've got all the modules and everything you need to know. And of course, it comes with a complete set of trading indicators as well. And speaking of the indicators, you can find all the details here at quantumtrading.com, MT4, MT5, Ninja 7 or 8, TradingView, and shortly, well, I say shortly, certainly in the next 2 or 3 months, we will have TradeStation up and running for you. And we will also be developing some new indicators for that platform, which we will then port backwards into other platforms as well. So if you're buying, you're more than welcome to buy one indicator. We have bundles, we have single indicators. You can start with one, buy 2 or 3. You will always get a credit for what you've bought if you want to upgrade to a full package. If you start with the full package, then you get all the indicators we develop in the future free of charge. It's just our way of saying thank you. You get 24/7 support. It literally is 365 days of the year. If you send us an email on Christmas Day, you will get an answer, believe it or believe it not. That's how we support our customer base. We don't believe in charging you for transfer your indicators from one platform to another. Some companies do, we don't. We think that's a rip-off, but there we are, only my personal opinion. So if you start in MT4, MT5 and you want to transfer to Ninja or TradingView, we'll make that happen for you at no cost whatsoever. And MT4, MT5 is one license, so you don't pay again. That's it, I'm done. Hope you've enjoyed today. Thank you so much for coming along. If you have any questions, you can drop Anna a line, anna@annacooling.com, or you can drop me a line, david@quantumtrading.com. Happy to answer those for you. And enjoy the rest of the trading session. We will be back later on this afternoon at 3:15 UK time on the US markets, US indices. So enjoy the rest of the trading session. Thank you so much for coming along. We do appreciate you taking your time out of your day to come and join us. Hope you've enjoyed it. Hope you've learned something perhaps you didn't know before. And we will see you again later. And if not, enjoy the rest of the week and have a great weekend. Bye for now.